There's a bombshell Bitcoin price prediction. You know why? Because everybody who shills their things to talk about it always wants to make the headline exciting. And, news headlines love using that word, bombshell. Like shocking. No, it's not always so shocking. Sometimes it's just, hey, assets move along as they do. Mostly to grind people out. And it's during the, what people call chop, which is really not, but that's what they call it, that you get a lot of that grinding happening. Now, yeah, you're going to lose more people, weirdly enough, in longs during a bull market and in shorts during a bear market than you will in longs during a grind or in shorts during a grind. The reason for that is because there tend to be less retail traders willing to put their money on the line during a grind, especially towards the stages where it's already not the very beginning of it. Because at that point, people think, oh, this is going to be a long, slow grind. It's boring and I want to get out. Right? And that is why you'll have less people during the grind, especially once you've passed the initial point of the grind and you're in the long, slow part of it that most people say they don't like. But, of course, if you are a low time frame trader, the grind is actually amazing. Why? Well, because during the grind, even if the points move less than during a run, they tend to move back and forth. Because that's how the returns are working, and that's how the volatility is working during the grind, right? Maybe you have less volatility, and therefore fewer returns. And it just goes back and forth. And it just keeps on grinding back and forth. And when it does that, sure, your returns will be less great per trade, maybe, sometimes, although not necessarily. But you can much more consistently trade smaller moves back and forth. And you can see that by looking at the lower time frames of the 90-minute, even the 4-hour, which is really kind of still a high time frame as far as low time frame traders go. But anything from the 90-minute on down, and you'll see lots of hills and valleys during a grind, just as you do at all times, really, but especially during the grind, right? And the asset will just move back and forth, back and forth, back and forth around the mean, right, around the returns. Why? Well, because that's what assets do, right? And when they're being traded, the returns move away from the mean, and the returns mean revert, because that's what assets do. Price just follows in a random market. Now, if you're going to tell me, but Yasha, you said this 1,000 times, tell us something new. Well, I'm telling you something new, okay? I'm telling you that the Bitcoin price prediction is a bombshell. It's going to be massive. But don't lose your sleep over it, okay? When people tell you that it's going to hit a certain price by a certain point in time in the future, okay, on what are they basing their assumption? Okay, because that's what they're doing. So are they at least basing it on volatility, entropy, probability, and statistics? Because if they're not, or at least volatility, or at least entropy, right? Or at least probabilities that matter, and statistics that matter. Right? If they're not basing it on those things, then it's just hocus pocus, throw a dart at a board, or just pull a number out of your rear end and say whatever you want. right? And what's the point of that? Any monkey can do that. In fact, a chimp throwing a dart at a board will have a better chance of being correct than a analyst who went to business school, learned about finance and all this other stuff, right? They have no idea, for the most part, right? Why? Well, because they didn't necessarily study math and learn about how math affects trading, right? Maybe if you are listening to, people in the profession who happen to be professional options traders on on actual Wall Street or in Wall Street related firms who actually use, volatility, right, or Laplace distribution, etc. Sure. Then you might hear some interesting insights, but you'll notice that they won't tell you crazy long-term projections as if they're set in stone. You know why? Because they're not set in stone. It's all probabilities. And professional traders of the VEPs, whether they work for an options trading firm or any other kind of trading firm, right? Some HFT firm, whatever it might be, okay? They're not in the business, first of all, of telling anybody anything about what they do. Least of all, what they predict things are going to be. Okay? They just do their job. The only two people that they might tell what they're going to do and what their predictions might be, and they're not predictions, but they're forecasts, would be usually somebody like their managers, right? If they have one, right? If they work for a big firm, they almost certainly do, unless they're the owners or the very, very top executive, who even they usually would report to the board, and they don't discuss intraday trading with their board, right? Because the very top executives of those firms are not themselves intraday traders, usually, right? So how is it and why is it that all the silly TA guru schmurus are out there telling people bombshell Bitcoin price prediction stuff, but somebody who actually knows what they're talking about won't tell you a price prediction? Well, because if we're being honest, and we should be, well, you know that if I were to tell you, oh, Bitcoin's going to hit exactly this number today, okay, if I say it as if it's a fact and that it can't possibly not do that, well, that should send a red flag up. But somehow, when people listen to all the YouTube Jimmies or YouTube Charlies or whatever you want to call them, all the fake TA gurus is what I call them. People listen to that and think, yeah, well, he has a large following or she has a large following. It must make sense. It must be true. No. Just because somebody has a large following, even cultivated over years, doesn't mean that what they say is true, and doesn't mean that they know anything about what they're talking about. They can pull the wool over people for a very long time. This happens all the time. And just because somebody's been doing this for years doesn't give them additional credibility. What does give somebody additional credibility? Well, if somebody gives you probabilities and say there's a specific mathematical probability that the asset will or will not go above this certain level or below that certain level, right? Those are probabilities, right? And you can do that for any asset on any time frame if you just know how to read something like standard deviations, of normal, the normal distributions, or the Laplace distributions, right? Standard deviations are normal distributions, right? And there's Laplace distribution. There's other ones as well, but we stay with those. The reason, again, we stay with those is because those are the ones that generally move the markets. And until that is not the case, well, those are the distribution models that we will continue to work with over at Alpha Trading. Speaking of which, if you don't have the free tools from Alpha Trading and you want to learn, it's completely free. Like I said, FREE, yes, that word. You just go to alphatradinghq.com/discord, and you can request the free tools. Just open a ticket and just go to the request support channel, click the create a ticket button, and in the ticket just write your TradingView username and say you want the volatility starter pack to get free access to it. And that's it for now. Happy trading.